All right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about the Bitcoin miners. The miners are starting to behave very differently from each other, and I want to illustrate that through some charts because I think it's getting a little bit confusing. They're no longer all moving together as a group. So I want to break that down for everybody. And of course, you guys know we talk about Bitcoin and the Bitcoin miners all the time on this channel. But if you're new to this channel, please remember to subscribe and hit the notification bell. Also, if everybody could smash the like button, I would appreciate it. Pardon my voice today. I do have a cold, so hopefully it doesn't interrupt us too much. Also, if you want to help support the channel and get some extra content, you can hit the join button and subscribe and become a member to the channel. So we do an extra live feed for members only and some extra videos every week. Let's talk about the Bitcoin miners. I want to show you guys some analysis that I've put together because I will tell you, I've been reading in the comments, and I do read all the comments. I respond to a lot of them. Sometimes I don't respond because I don't want to be adversarial, and, you know, we all bring certain emotions into the equation. I will admit I have favorite companies, and some of my favorite companies really probably aren't my best investments, so I have to try to do my best to separate, you know, the interest I have in a company and how much I love what they're doing and how long I've been sticking with them from what is their actual performance. So I try to do my best to make as many different analysis as possible to help make it clear even to myself to combat my own biases. So of course none of this is financial advice, but I want to show you some of the stuff that I'm looking at because there was one comment in particular yesterday that really made me think that the Bitcoin miner activity is getting very confusing to people, and I do think people's emotions are also starting to get in the way. I had mentioned that Hive Blockchain's stock had been holding up fairly well over the past several months versus the other Bitcoin miners. In the context of the fact that the merge just happened, so they're losing a lot of revenue stream. My point was they seem to be behaving, you know, about average for a Bitcoin miner, and I got a lot of responses that, you know, their stock is the worst, it's down the most out of anybody, and I'm going to show you some data and show you that that is just not true. And that doesn't mean that I'm telling you to buy Hive or that Hive is great or I'm telling you that Hive is bad. This is the data. So I like to try to look at as much of the data again to flush out my own biases. I could tell you there's 7 or 8 companies across, and 2 or 3 of them are Bitcoin miners that I have an absolute bias towards. So I try to slice this data up as much as humanly possible to really cut through my own bias. So I'm just going to show you guys a little bit of the information that I look at to try to see what's really going on a deeper level. Some of this is basic stuff, but it is not intuitive. And if you're invested in the stock, oftentimes the stock that we hate the most is the one we've lost the most money on. But that doesn't mean that that stock has performed the most. Maybe we were overweight in that in our portfolio, or we bought in at the wrong time, or whatever the case may be. So let's get to, I'm going to start out just by straight looking at the market caps of, I think, 14 publicly traded Bitcoin miners. There's over 20. So let's look at that chart and let's look at how market caps stack up. Okay, so a lot of times we get caught up in the price of a stock. Some stocks may have a very similar price or the exact same price, but they may be very, very, very different companies. For instance, Core Scientific is trading at roughly the same stock price as something like a Bit Digital or a Gree, but you can see it's multiple. It's 6 or 7 times bigger than those companies. So looking at stock price alone can be very misleading. You've got to keep your eye on market cap. That's one crucial thing that can really feed on people's emotions. As stocks get down near $1 or under $1, it may feel like they're failing and it's a disaster, but you got to take a step back and look at their market cap and say, how's their health as a company overall? How does this market cap compare to where it was 6 months ago? You know, is their stock price moving down because of dilution? Is it moving down because they're just losing market cap? So I'm going to start out by pointing out one thing. You can see there's drastic differences in the market cap of these companies. All of these companies are small cap stocks. They're all under $2 billion. The biggest one right now is Marathon. But what I want to point out is there's 14 companies on this list. If I take Bitfarms, Iris, Argo Blockchain, CleanSpark, Wolf, Bit Digital, Gree, and Mawson all put together. So that's more than half the list. The total of all of their market caps is less than the total of Marathon's market cap. So I think it's really just important to look at some of these relationships and understand, like, where's your opportunity? Where's your opportunity to 10x? It's a lot easier to 10x on a Gree that's at $90 million. Gree could 10x and it still won't have the market cap that Marathon has. And again, I'm not telling you to buy Gree. I'm just giving you examples of how, you know, other other ways to think about this. I will tell you one of the companies I have a bias toward is CleanSpark. And if I look at CleanSpark, they have a $161 million market cap. I don't think that reflects the business that they're conducting and the balance sheet that they have, in my opinion. But I try to look at the information, and we're going to look at some other charts to see, does the data support what I think, or do I just emotionally think that CleanSpark is doing a better job and I'm not paying attention to all the data? Just to group these together, you've got these three at the top. So Marathon, Riot, and Core Scientific are the three biggest market caps. Now, Core Scientific is half the market cap that Marathon is. Core Scientific mined 1,300 Bitcoin last month, and Marathon mined, I think, 187. So obviously there is a lot more that goes into market cap than just this month's operational performance. Now, looking at the forecasts of these companies, you've got to take it in balance with seeing how they've performed versus what they've said they were going to do over the course of time. Now, Marathon has a massive balance sheet. They have a massive amount of Bitcoin miners, but so does Core Scientific. Now, the biggest difference is they both have a lot of debt. Core Scientific's debt isn't structured as well as Marathon's, and that's really the biggest difference. Actually, the biggest difference is the fact that Core Scientific is mining thousands of Bitcoin a month, and Marathon at one point was under 100, I think, in July. Okay, then you've got the next group. You've got a bunch of these that are somewhere between $350,000 and $375,000. So Hut, Cypher, and Hive have very similar market caps. These are not similar companies. These companies are very, very different from each other. So this is where it gets important. There's 14 companies on this list. Yes, their primary activity is mining Bitcoin, but all their business models are not the same. All their balance sheets are not the same. All their gross profits are not the same. So you've got to dig into it. Cypher, for instance, really hasn't even just barely started mining Bitcoin. So lifetime to date, they've mined almost no Bitcoin at all. Versus Hut, who's been mining Bitcoin for years, and they have hodled self-mining Bitcoin on their balance sheet of over 8,000 Bitcoin. Here's two companies that have virtually the identical market cap, but they couldn't be further apart as companies. So this is why I always say do your own due diligence, know your companies. And okay, so with all of this in mind, I want to show you a couple of charts that I have put together that kind of assess the activity of these companies over the last 90 days. And some of these Bitcoin miners are retesting the lows that they hit when Bitcoin hit its low over the summer. And Bitcoin is very near to retesting its summer low. So I took the lowest price for each one of these Bitcoin miners. I took where they bottomed out sometime in the last 2 weeks of June, and I've measured their performance from that day until this day. And you can see on this schedule, it's where the Bitcoin miners really start to differentiate themselves. Where are they versus their summer lows? Some of these companies have held on to their gains to some extent, and other of these companies have lost most or all of their gains. A few of these companies have taken out their lows from the summer, and they've set new, really all-time lows. So that's worth understanding. CleanSpark is 13% lower than it was at its low on the summer. So this is one, as I've told you guys, I probably have a little bias towards them, but CleanSpark has had nothing but stellar operational reports, and yet they're actually setting new all-time lows. And when I say all-time low, I'm really talking about the last 2 years. They took out their lows from the summer. So each one of these companies has a different story. In general, I would point to the fact that CleanSpark increased their officer compensation. That took this company out because performance-wise, I would have expected them to be similar to these types of companies up here that are, between 20 and 50% up, but instead they're 13% down. So you can see that one single act, in my opinion, has totally destroyed their stock. So for me, I view that as a buying opportunity. But again, it's just information. That's how I interpret the information. I think it's important to understand this information. I think it's important to look at GREE, and if you think it's overpriced or underpriced, the reality is it's only 6% above its summer highs. So if you like what GREE's been doing for the last 3 months, you're getting another chance to buy in right now at basically its all-time low. So Iris Energy is a company that I've had my eye on. It's near the top of the watch list, but you can see it's up 38% off of its summer lows. It really never had that big pullback. There's 11 companies that are anywhere from up 12% to down 36%. So, I look in here and see, is there an opportunity in here? Because I'm getting a shot right now to buy this either at its all-time low or near its all-time low. I started this by saying there was a comment that talked about how Hive is the worst performing stock out of all of these. But in reality, you can see Hive is actually up 48% off of its lows from the summer. So it's overperforming. It's in 4th place out of all these Bitcoin miners on this list. So I wanted to present these different charts to everybody. These are some of the different ways that I slice and dice this and look at it. It's not complicated. It just takes a lot of time to do all this. So that's all I got today on the Bitcoin miners. Thanks so much for watching. Hope this helped. If you made it this far, please remember to like and subscribe to the channel, and I'll see you in the next video.